What's going on, guys? I want to recap for you guys a trade that we took on the live stream today. Now, this trade was going against a trend, but it was much later in the day. Okay. So, a lot of times when the market opens up and the price is pushing in one direction, it's very easy for ourselves to let our minds go and allow ourselves to call the top, call the bottom, right? I don't normally like going against a strong trend until at least midpoint of lunch. So for me here in California, that's going to be after 9:30 a.m. And the reason being is because typically after 9:30 a.m., that London session is going to start to close. You're going to see it start to a little bit of a change in the algorithm direction. And whether or not the move completely reverses, which a lot of times it doesn't completely reverse, but you will get some choppiness action that kind of goes the other way. Price action is a lot slower and it's easier to kind of manage your position. So if we look at this box here, this box that I drew out is around the lunch hour high. So what I did here was, as soon as we put in the lunch hour high, which was 21,747, let's just call it 750 for the sake of the video and for just easier context. If we broke 750, okay, which we did right here, we broke it and confirmed it, it then quickly reversed. So on the reverse, what you want to see is you want to see it pull back a little bit into this zone, and you want to see it hold. Okay. And if it doesn't start to hold and it starts to lose the bottom of the range, that's when you want to be short. Now you have a zone from 763 down to 730. It's about a 35 point zone that you can use to play with as a stop loss. You don't have to give up the entirety of that 35 points. You can give up maybe half. You can give up any closure above the lunch hour high as a stop. You can do something like a previous 5-minute candle as a stop. And from there, as long as we pull back and we don't put in a higher price, I'm looking for the short. And I'm looking for the short in terms of a scalp. I didn't expect it to come down this far. I didn't take all of these points. I took 10 points. And sometimes that's all you need to kind of add the cherry on top to your day. So the lunch hour high is here. That's marked out in the red line, 747. I've got the high of day marked out here, right? And now I create this zone. And how I come up with this zone is I look at the structure from when we started to consolidate. And I take the initial candle that broke out. I take a couple of lows. I take the floor. And I kind of just draw this zone. That way, visually for me, as long as I'm trading below the lunch hour high, as long as I'm trading in my zone, and as long as I'm trading above or below the low of day or the high of day, I can sit short if I get an entry. Now, here's a 20 SMA play. We can use the candle high as a stop. We can use the lunch hour high as a stop. We get in on the confirmation, a little bit of a back test here. There's also another 20 SMA that sets up here. Confirmation here, and you would catch a nice little move. So definitely start looking to some of these setups coming out of lunch. Okay, reversal setups coming out of lunch, scalps in the other way if we're trending prior to lunch. What I'm looking at here is a VWAP. I'm looking at the 20 SMA, and I've got my daily 5 and my daily 10. So this gives me all stacked areas of support, and it also gives me room to play with, right? Below the 20 SMA, below lunch hour highs, I've got this zone of resistance. As long as we stay below that, I can essentially hold this short. I don't need to wait for some, trend line break like this, or, I don't need to wait for a bigger play. I can try to catch it a little bit earlier from up here in this area, up here in this area, and then kind of use this as a stop way up there. Or I can look at it, wait for the 20 SMA to get broken, wait for a following candle to confirm, and then take it for 10 points, take it for 15 points, right? So just wanted to pass this information along. Again, I don't believe, truthfully speaking, in these conditions that we've been facing in the market, I don't typically believe we need to trade this time right here, right off the open. Big spike, big drop, a lot of choppiness action going up. I don't think we need to trade that. I think you can actually sit out the first 30 minutes and come into the market after initial balance. Here's your initial balance range. Initial balance highs, initial balance lows. I think you can come into the market here. I think you can take a trend line break later in the day. I think you can look after lunch for the reversals, after lunch for the reversals. I think you can look for those type of plays later on in the day when the price action starts slowing. Here's a trend line break here after the initial balance is set. I think this range, probably 5-10 minutes before the New York opens, and I think, up till 30 to 45 minutes after the New York opens, you can make a lot of money here and here. You can make a lot of money here. You can make a lot of money, shorting randomness here. But I don't think you necessarily need to do that. I think this is going to create a lot more stress. Maybe if you're having a little bit of trouble, try sitting out of this zone. That way you can allow some structure to be built. Because if you come into the market here for the long, you'll see that we're over 20, we're over VWAP, we're over daily 5, we're over daily 10. Bias is all long here. It's all long. So hopefully this helps you guys.